abbv. All right, guys. For tango. All right, stock twits. Keep them up. Love checking new charts. I've been doing follow-ups on the markets, SPX, sectors, gold, and it's fun. Fresh breath of air when I get to look at any chart. I love looking at charts that's different, that wasn't under my radar, that isn't mainstream, that's out there. So I get to practice my weight of evidence approach, Stan Weinstein's plethora of checklists to make sure that whatever decision you take, it has the most success, the highest probabilities of chances of being a successful trade, guys. 12-month moving average, higher trend. Let's do it. Got away from the 12-month moving average. Look at that distance from 12-month moving average. Look at that, man. Bam, 40% away. It's like, all right. This is the elastic is stretched. That combined with a big wick, sellers coming in, big warning sign, get another month, get another chance to get out. Sellers coming in, starting to define the support, the resistance just a little bit higher. And the next month, open here, went back up, but the sellers came in, brought all the price action back down, closing in on 12-month moving average. So these far away moves, pulling back, still above 12-month moving average, gapped up, sellers coming back in, and then when you had that close below the 12-month moving average, it was time to say, all right, this is done. Let's wait for a sideways move. And in case it goes down, I don't want to suffer. I want to get my profits. Because here was your breakout right here. The earliest of the breakouts on the monthly chart. Then you had another huge breakout right here. And now that's going to be some resistance turn support. So if ever you entered here, you want to keep the maximum of those profits. You want to ride that. And you would have exited here, worst case. All this profit. 1, 2, 3, 4, 5, 6, 7 months later. And here we are today. Declining 12-month moving average. We're below the moving average for 1, 2, 3, 4, 5, 6 months. Huge close here. Huge sell signal right here in October. Bounce back up. Full candle all the way back up. And you see we're seeing these candles now here on the pullback on the markets. So even if it goes back here, it's very hard to overcome the high of a previous monthly candle close. That was a breakdown below a declining 12-month moving average. That's a lot of pressure. So this, we're going to see on the weekly, is going to be probably legendary pullback. But it's a pullback within a down trend, guys. It's not the bull market doesn't start here. The stage 2 doesn't start here. This is a correction. Just like if I were to inverse the chart, when you pull back here, it's not the bear market that starts here or stage 4. This is a pullback within a stage 2 uptrend. Because over here, it could have continued up, a lot of damage, but it could have continued up here. And until you're below 12-month average, until you close below a monthly defined support line, and all that weight of evidence builds up, you're still in the trend. Still in the uptrend, and now we're still in the downtrend. Following month, down, all the way down, but the buyers came back in. And this month, it did not cooperate. You see, hitting that 12-month average that's angling downwards, creating a lot of pressure. And right here, this month, all the way down here, the month is going to close in I'm doing this podcast now. There's a few hours before the month closes. So you're still below 12-month average, still in the downtrend. So that's how I look at it. That's when I start the higher trend, I want to make sure it's in my favor. So pretty much whatever happens on the weekly, I'm going to always say, yeah, it looking good on the weekly, but I'm still in a downtrend. I want to be here. You want to buy when you're here. And now you're trying to buy here. This has more chances right now because you're under. Remember, for the 12 monthly average to start angling upwards to have a trend in your favor. Well, you need price action to close up above it. And once it's above, then you start carrying that moving average up. Same thing here. So here's the buy zone, knowing that you're going to have some resistance here. This is the buy zone. Here it's called catching a falling knife. No man's land. Could keep going down. You have that weight, guys. That weight hurts. At any moment, that hammer of the 12 monthly average, when it hits, it only has to do is strike once and whoop, sucks you down. And when you try to climb back up when you're in a downtrend on the smaller time frames, it's small moves, right? To do a big monthly candle like that. Small hammer hits, tuck. But when you're downtrend, the 12 monthly average, one swoop hit, and swoosh, you go down, guys. So you got to be very careful. You really want to close above that break line right here at 92 before even considering going long. And even then, that means you're just going back into a stage one. And then that stage one could go back down if ever. You have to really wait. Start creating price action here. Perfect here. Look at this. This is what you're looking for. Not this. All right. Oh, look at that noise. Okay. Remove all scribbles. They should write here. Remove all Patrick scribbles. I'm just going to put my line back at the 92. 92 monthly define. Declining 30-week moving average. Underperforming the SPX. Accelerating its move down against the SPX. You see, we're out. We're starting to create a lot of Ichimoku cloud defined resistance. Lower highs. So you see, even if those candles were impressive on the monthly candle chart, you see that green candle that almost as big as the red candle, and you say, oh, it went back up. You're still not doing higher highs. That 30-week average is still pushing you down. Big warning volume right here. These are your warning candles right here also on these big weekly downs. 14% down. 4 or 5% down, but huge red candles. And right now, it actually broke down last week. Continuation breakdown. Here would have been a great risk reward entry. But the buyers are coming in. So we're hitting weekly defined support right here. And the buyers coming back in. So this could actually bounce back up. Test that weekly defined support right here at 84 and go back down. Or if that's not solid enough, maybe go up a little higher and pierce through that. Have a wick above, but only to close below. Hit that 30-week average and then go back down and test that level here. So the trend is down. You're below 30-week average. We could check out. Let's have fun with the stock, fast stock on the weekly. Whoa. Higher lows. Even I use the closes to draw my lines, to draw my trend lines. The rest, those wicks being noise from smaller time frames. They're less important than what the market decides to close the week at. And if neutral or no divergence seems to have slightly higher lows. You could make a case that this might push up a little bit, but not a sustained, not a high volume gas tank to really say, okay, this is huge divergence. Low in the price action, lower lows, but higher lows on the indicator to give it good juice to make a real run at previous highs to try to buzz a 30-week average. Not quite there yet. Monthly. And fast stock on monthly. You want to see in what power band you are. Seeing that uptrend. You're in this zone, overbought territory. That's what you want to see. And now, look, on the monthly, guys, you're below, you're in oversold territory. That's the power band for the short. And after that, what you want to see, if you want to play up, you want to see it starting to cross over here. And if it starts crossing over here, price action is probably going to get close to that 12-month moving average. We're going to get close to that horizontal breakdown line. And then after that, you could get a zone here where you could ride a nice monthly candle chart, stage 2, guys. This is going to be a hard one, Tango. I'd wait for this to construct a little bit better. I'm not a fan of buying when I'm below. I really respect those stance commandments. Do not buy if you're below a 30-week moving average. I apply that on the higher trend. Do not buy if you're below the 12-month moving average. And I could even give it a chance. We could go see on the 50-day moving average, see if we get some momentum here. And indeed, you are hogging that 50-week moving average. So on the shortest of the candles, but you're still below it, you still have that monthly candle, monthly chart defined resistance there to break above. So until that, abbv, you're in a downtrend. Keep an eye on that 92 level, guys. That's it. See ya.